Friday, everybody. Welcome to another episode of Cafeicto with Mr. Miami Real Estate. Today we're here again with Jorge Touzet, now Zoomloans. And if you've missed our other episodes, you would know that he's been doing this for over 25 years now. So congrats on the new office. You just opened up in Dayland Mall. We're here. It looks phenomenal. Congrats.
We're very happy to be here.
That's awesome, man. So today we're going to be talking about a very popular topic that you guys requested in the comment section, co-borrowers. So let's get right into it. What exactly is a co-borrower?
So a co-borrower can be anyone who can assist another consumer. Doesn't matter who's first or second. They both have the same level of responsibility as consumers, borrowers. Okay. They can be occupant or non-occupant co-borrowers. So a family member can help whether they live with a consumer or not. And what we do with a co-borrower is they assist by bringing on their income, their credit, and we also have to analyze their debt and complete debt to income ratio. It's a way to help consumers qualify for more home.
Perfect. And when exactly will a buyer need a co-borrower?
In the event that there's a debt to income issue where they have too much debt associated with their income and there's a qualifying issue, we can bring on co-borrowers to help debt to income issues. You cannot use co-borrowers for replacement of credit scores. We're always going to use the lower of the two. But yeah, it's basically an assistance to a first buyer. You can have multiple co-borrowers. There's no limit.
Okay. So let's get technical with the terms. What is the difference between the co-borrower and the co-signer?
There is no difference. We consider all of them co-borrowers. Okay. Co-signers might be more closely related to auto loans, things like that.
Okay. But, so the terms are interchangeable, basically.
Interchangeable. Co-borrowers, co-signers.
Okay, perfect. So this is a very popular one that people really wanted to know. Does the co-borrower necessarily have to live at the property that's being purchased by the buyer?
Not necessarily. Like I said, there are two types of borrowers, of co-borrowers. You have the co-borrower who occupies in the event of a husband and wife situation, parents currently living with daughters or sons, siblings that live together. You can continue to live together and they can assist you as an occupant co-borrower. You may have a situation where a family member lives out of state and they can afford to help you and they can co-sign for you and they don't have to move into the house for you. They can remain in their current home. It's just we have to address all of their debt as well, and there's some math to do, but it's a good solution for a lot of people who aren't making it to their budget home.
Perfect. That's awesome. And you kind of answered the next question as well. So they don't have to be married to be co-borrowers. They could be.
No. You don't have to be married. You don't have to be blood relatives. You don't have to be. You can be friends and co-sign.
Okay. Perfect. Now
there's have to be some common sense associated with the co-signer and the scenario. But there's no rule that stops us from co-signing regarding blood relations or anything like that.
Perfect. And now I guess what people want to know is does it matter? Is there any impact between who the borrower is and who the co-borrower is, or how does that work?
The relationship between them, like I said, there has to make common sense. But there, you can have a friend co-sign a house for you. Okay. He's a non-occupant. It can happen. We've done it.
Okay. And then I guess this is the question where people get scared and they don't know that what can happen. Are there any downsides to adding somebody as a co-borrower?
Well, the downsides would be negative impact on credit if one of the signers doesn't pay. Right. The property, that could affect their credit heavily. It could affect the other signer's home buying ability. Okay. If things aren't designed properly. So it can have effect on both consumers. So it's something that you should really discuss with your family member, friend, partner, and then sit with a professional and go over the details. Make sure that everybody's going to be able to keep any plans they may have in the future with home buying.
Perfect. I love that. Now let's get into a scenario because this is, I guess, one of the most common ones that we see. And when we're preparing this video, we actually got asked this one a couple times. So what happens if, a lot of people just kind of don't make enough money, but what happens if the co-borrower has great income, but they got terrible credit?
Right. Well, we have to use the whole package. We can't disassociate income or credit because something's not working. You actually got to use whole income, whole credit, and you gotta attach it to each individual. So you can't omit one score and use a person's income as vice versa. You got to use the whole person as they come.
Right. So it would apply the same way, backwards. If the buyer the original buyer has, great income but bad credit, we can't just get a co-borrower with good credit.
And we're always going to use the lower of the two credit scores. So,
perfect.
You can't remedy a low score by adding a co-signer with a higher score. It doesn't work. You can do it to remedy income and debt to income issues, but not credit.
Perfect. I love that. That's everything that we have for you today. If you guys have any questions, be sure to drop it in the comment section. And as always, be sure to subscribe.